Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Rama Krishna Chunchu. He has more than 15 years of experience as an IT professional and has been investing in real estate since 2015, both as a limited partner and also as a general partner. So thank you so much for being on the show today, Rama.
Thank you very much, Charles. Thank you for this opportunity. Really appreciate it.
Yeah, it's great to have you on and to hear about your story and also your whole your whole progression from going from IT into single family into multifamily and beyond. So please tell us a little bit about your background, both personally and professionally, prior to getting involved with real estate investing.
Yeah, sure. Absolutely. Thank you. So I'm basically born and brought up in India, and I studied in India and worked a couple of years there in IT field, then came to US around 2007. So started working IT side, worked in IT field 15 plus years. Then started investing in real estate around 2014, 15, started with single families and invested a couple of years, then switched towards multifamily with the different reasons that we can dig deep in later. So that's how I started. Yeah.
Awesome. And so tell us about all the different real estate or all the different investment opportunities and routes out there to run a side hustle, let's just say. Why did you choose real estate as your investment vehicle? I'm always interested by how people answer.
Yeah. So I didn't take, I invested a couple of stuff like outside of real estate, stocks and those stuff, but somehow I'm not interested. Main thing is no control or what went well, what, going inside of that. But from real estate point of view, so there are multiple advantages tax benefits, and also you get cash flow and also appreciation, all these factors I considered when investing in real estate.
So tell us how you started in single family. Were these turnkey properties? Were you flipping properties? Were you, what were you doing? And then kind of how that went into multifamily?
Sure, absolutely. I started with, a kind of renovation project. And also purchased, completely new townhome. And also I did a few flips. So if you talk about, single family side, first one is renovations I purchased in North Carolina. It's a low price, but, and not so good location. So, and I did complete renovations for that project, replacing carpets, painting, and, all kinds of stuff, electrical stuff, all the stuff on that project. And also initially I tried to manage myself, but I faced some challenges I didn't do proper, screening of tenants, and then the tenant, he paid first couple of months, then, I faced some challenges, rent collections. So then I gave it to third-party property management, all the stuff. Yeah. I learned a lot from that experience, a lot of things went bad. And, so when you face so many challenges, you learn a lot from that, from that, I learned it's better to, hire third-party property management to manage the property and stuff you involve in and taking care of all the stress, all this stuff,
Yeah. So it's interesting that because the amount of information and experience that you generate from self-managing a property. And as you described, the class of your property, but it's definitely a thankless job, but it's one of the most, if not the most important part of the whole real estate investing journey. The whole part of it is really property management. How did you find that property manager, and did you ever have to change them?
For that one, the single family, I purchased, I find the property manager through, local market or local knowledge. They have brokerage company also. They have real estate, realtor, that realtors. Through that, I found that property management company. They are very good in that location, that market. They're very good. So I didn't change them, They managed my property for 1 or 2 years. Then I sold that property. Yeah.
Nice. Yeah, that's the whole thing, is finding the manager that is well-versed in the type of property that you own and in the area. And that gives you so much of an upside, and it's such a benefit, more than just them handling the actual management of it, that you can do a much better process and when they're when they just know the area and they know everything about it. So tell us about your transition. You held that for a little bit. How did you transition? Why did you transition from single family into multifamily investing? And about what year did you do this? And then we'll get into your first deal.
Yeah. So that time, I was managing, multiple properties. I have properties scattered multiple locations, and at the same time, I was working full time, IT field, working full time, and managing these properties scattered across multiple locations, bit challenging. So I felt like that stress, handling like so many cars and all the stuff. So that's how I thought of shifting towards some other arena. So some luckily I got some commercial real estate book by Peter Harris, and I read that and like the concept of scaling up and leveraging property management company, and also scalability and also management, both point of view is better option. I thought it's a better option. So that's how I explore a little bit more into multifamily space, reading a lot of books and articles, all this stuff, explore a lot in bigger pockets, and also read a lot of books and listen podcasts. That's how I started into multifamily space.
So when I went into my first larger syndication, which was my largest property I've ever invested into, I had a number of limiting beliefs that I had to overcome with it, right? Raising money, raising millions of dollars, working with a team that I wasn't used to working with. And what kind of limiting beliefs did you have when you started multifamily, and how did you ultimately overcome them?
Yeah, that's a great point. Not only first properties, that limiting belief is always, it will continue in multiple properties, multiple stages of the life. So during first stage, I don't have track record of managing, bigger properties. That is one limiting belief. I don't know how to manage this property. Another limiting belief. So through education and through networking with an experienced operator, so understand about process like underwriting deals, underwriting bigger properties, and also how to raising capital, and also how to leverage experienced operators for managing properties. Multifamily is a team game, not a single family like where you can manage yourself. It's a single person's game. Multifamily is like a team game. So need to be perfect in all areas, like underwriting or analyzing market or sourcing deals or capital raising or managing property or asset management, all this. You don't need to be perfect in all these areas. So if you're good at one or two areas, that is more than enough. So that kind of knowledge I gained by networking or by through listening podcasts or reading books. So that's how I overcome my limiting beliefs.
So tell us about this first deal. How did you find the deal?
So it's through broker relations and it's on market deal. So that's how I find the deal.
And so, as you were just saying, you were working with some partners on this deal. And how did you find your partners? And how did you actually vet them? I mean, obviously, your vetting process is probably a lot different now than it was then. But how did you ultimately vet them to know that they were the right partners to work with on this property?
Yeah. So I was like listening podcast, and also I started my own podcast. After around 2000. I think 2020 or 2021, I started my own podcast. So, and also I was attending various virtual conferences and listening various podcasts. That's how, I reached out various operators and also met various new operators or new investors and experienced investors. That's how I find my partners, podcast and also virtual conference. Through that, I find the partners. Again, active investors, passive investors, I followed like know, like, trust. That is the principle I followed. I like them. I know first of all, we need to know that operator. Then we need to like that operator. So then you need to trust that operator. That's how I did my vetting process, So yeah.
So in your first deal, I think most operators find it difficult to raise all the money and to make sure that it's usually a process because it's your first time doing it. How did you capitalize the property? I mean, how much did you guys raise approximately? What did you guys get in debt? Stuff like that.
Okay, sure. Absolutely. So for this, my first deal heavily involved like on acquisition side. I sourced the deal and also on the right, and I did the property tours, all this stuff. So I did raise a little bit capital. Overall, it's like purchase price is around 5.1 millions. So we raised close to 1.9 to 2 millions. So we got, it's a bridge debt, and we leverage experienced operators in this space to raise capital. Also raise a little bit capital, but mainly we leverage experienced operator who are good at raising capital. So utilize that, we basically leverage the experience of others, for raising capital. Yeah.
So they were experienced partners that you had, the experienced syndicators were your partners on this deal. What were some of the lessons that, let's say, you took away from the deal as being a first-time multifamily syndicator? I mean, what happened, and what have you kind of learned and brought into future properties that you've invested into?
Yeah, definitely. I learned a lot from this deal. Basically. So things were different. Before we closed this deal, interest rates were low, and then interest rate increased rapid, like within 18 months, it increased almost 3 points something. That is one thing. We need to plan for some kind of uncertainties. So the best way is we need to keep enough reserves, cash reserves, so that way we can protect properties uncertain times, like either higher mortgage pages or uncertain, repairs or maintenance issues, like those kind of stuff. We can de-risk the stuff by keeping enough reserves. Another thing is always we need to be more proactive, especially from operations point of view. So more proactive and asking right questions, and don't accept whatever they throw. So especially management point of view, we need to be more proactive and find the solution, and those kind of stuff is very, very key lessons I learned from this one.
Interesting. Yeah, there's a lot of great lessons. Did you guys keep the same property manager that you've had when you started till now?
Yes. So we are same property management. We are continuing. Yes.
Okay. I always ask that because, as we were saying before, how important property management is, but the switch over from property management is a huge process and very time consuming. And then also it's just a very difficult process. So it's something that if you have worked with it, or if your partners had worked with that manager beforehand, it makes the process so much easier, because that's one thing that you don't have to worry about changing down the road. And you also know how each other work. So it makes it for a stronger business relationship.
Yeah, exactly. I want to add a couple of other points also. Other point is we need to do proper, thorough due diligence before bringing in right property management company. So success in operation side. So bringing right team, right team with right values, similar kind of values. Even not only property management company, even with other partners also. You need to bring right kind of team. Yeah, that matters.
Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com.
When you're buying a property, there's always, you can do your due diligence, but there's always what I call for the first few months of owning a property is really the initial stabilization period, which is where you really figure out exactly what's happening in the property. And there's always surprises, but you can protect for that. What were some of the surprises that maybe you realized after purchasing the property that you weren't aware of it before?
Yeah, so there is, I think it's kind of plumbing issue or some kind of issue. Yeah. So that issue we uncovered after we took over the property. That is definitely kind of surprise. And also other thing is speed of execution. Also one other thing I learned from this from this property. Managing this property.
Yeah. Very good. Yeah. Plumbing is, you can check. I mean, usually when you're doing it, you're just, you're sneaking lines and stuff like that and making sure it is, but there's many times I've purchased properties and there's plumbing issues with it that you find, and then you have to rectify, but there's only so much due diligence you can do when you're walking a property. You know what I mean? So it's the only way you really protect against that, I've found, is just like you said before, having the reserves. You know what I mean? Yeah. And if you have any unknowns, you have to increase those reserves, and hopefully you don't need them, but if you do, you have them, which is great.
Yeah. I just want to add another thing is before purchasing, we expect things will go as planned, but sometimes it may not go as planned. It will take more time than what we expected. We need to plan all this stuff, and also we need to keep enough reserves, all this stuff. Yeah.
Yeah. So, you invest a lot as a passive investor, and this is always an interesting thing because myself as a passive investor for many years in real estate and in other assets, how do you de-risk your investments as a limited partner?
So yeah, definitely, the other factor I mentioned, like know, like, trust, right? There are different levels of know, like, trust, right? First thing, always like operators, you need to like, know, trust these operators. Finding good operators is always, first and biggest thing as a passive investors. Then next level is like, market level. You need to do a lot of research about the market, whether population growth or job growth or, landlord friendly. Then sub-market level, current trends and projected trends, what kind of business plan these operators executing. And the next level is, property level, and what kind of properties, class A, class B, class C, and track record about this operator about this kind of asset classes, and is that properties in good sub-market or those kind of stuff also we need to do to avoid any kind of risks. Yeah.
How did you find your operators when you started the process, as you say, know, like, and trust them?
Yeah, so I found them through through mastermind groups and also through podcasts and also conferences. That's how I found the operator. And always, I think conference is the best way to find the operators. Yeah. And then podcasts and books and some other ways, meetups.
Yeah, I have to say, this just reminds me is that a lot of the LPs are a lot of the GPs I've invested with passively, I've met through conferences. And whether I met them directly or I met someone that introduced me to them, it's a lot of face-to-face. And it's, conferences, that's one of the great things is you're able to really meet someone, talk to them, even if it's for a few minutes, and you understand a little bit more about them than you can virtually.
Yeah. Yeah, definitely. You feel the energy and also you feel the, leadership style, all this stuff.
Right. So what kind of mistakes have you made as a limited partner, or maybe things you didn't do initially that you do now when you're reviewing a new passive investment? Because I know for myself, I have a list of things that I never did on my first one, but many years later, I check through as before I invest.
Yeah. So my first deal, I didn't do too much of due diligence. I did it only operator level. So I trusted that operator, I invested. But now if I need to invest, I will do all three levels I mentioned, in a operator level, market level, and also property level. And also I will do a little bit on landlord, all this stuff also. What other things? I didn't do much mistakes, but maybe I will not take too much time to invest in any passive invest deal. Maybe I will move a little bit little bit faster for investing any good. If I feel it is good passive investing opportunity, I would directly invest, without delaying or without wait for another, good opportunity. Yeah.
Right. Yeah. So make your decisions faster. Don't drag your feet. It's a difficult thing because you don't know when you're reviewing, you don't know exactly what to look at. And now being on the other side of it and buying properties, I really know the things that I'm looking for, not only in my partners that I'm working with, but also, like you said, the market, the property level. Right. Yeah. So you can tell a lot. I don't even have to look at the operator. I can look, first of all, just at the market and at the neighborhood and at some of the rental comps and how close they are. So I know, and then, Google Earth it and I see what's around it. These things that can be done in what we're talking about 20 minutes, you can really move forward and kind of make your set and then really dig in, I guess, if you are, into a more in-depth analysis, if they warrant that.
Yeah, exactly. More because of active sites, so I can see the business plan and the entry caps, exit caps, all this stuff, interest rates, all this stuff. Also, I'm aware of that. So based on that, so by seeing underwritings, the business plan, okay, whether this guy can execute this plan, whether this plan is realistic or not, that stuff also there. Yeah.
Yeah, that's the thing, the realistic, because you don't really know. And I think finding the comps and looking at their rental comps, because I've seen this before with new syndicators that have brought me deals to invest with them many years ago. It doesn't really happen that much anymore, but it would be something that would say they're giving you a comp and it's miles away and it just doesn't hold any water. It might as well be in another state because it doesn't matter. You know what I mean? And these are things that you can, if you're not looking at these things, very simple metrics that they're putting in there, it can make it from possibly their numbers are accurate to maybe they're not accurate at all. So
normally brokers will share that kind of comps, so maybe they might pick up from that.
So you gave a lot of great information about you. What would be some of them if someone was coming to you and they wanted to become a passive investor? What would be some of the main advice that you would give them? I know you had your 3 points, which maybe you can go over again, but is there any other advice that you would give to them, to a new passive investor?
I will suggest them to attend, conferences or, meet, operators, feel that, maybe talk with more experienced passive investors. That is the best way, you can learn about passive investing side.
Yeah. It's interesting when you ask passive investors, and if I get on a call with someone that's been through many cycles, so they've invested, they got their money back, they invested, they got their money back, hopefully, their questions are much different from a new investor. And you try to, you're answering to what they think is important, but you want to make sure that they understand the business and like really what the business plan is. And so that's great advice.
Yeah. And also they can get references who are the good operators and all the track record also you'll know from, experienced passive investors.
Right.
Yeah.
Yeah. That's one thing I always like asking is to new people that might be investing with us, potential investors, is that what were your past experiences, whether that's active or passive? How did that work out? And not that I need names or anything like this, but you just so you have an idea of like, what do they really want and what weren't they getting? And a lot of times it's communication.
Yeah.
They're just lacking a lot on communication, which I understand. It gets busy as a general partner, but it's one of those things is that you have to put out those updates and you have to get back to your investors right away to answer questions and to really field anything that they might have lacking knowledge on.
Yeah, absolutely.
So you 15 years as an IT professional, I think 8 years as a real estate investor. What do you think are the main factors that have contributed to your success over the years?
Yeah, definitely, persistence is one of the key aspects that helped me to move forward and get some success. And other thing is, growth mentality, growth mindset, and also learning new things. These are the things mainly helping me to success, and never give up, there are so many challenges as a general partner, finding deals or, getting deals, all this stuff. So never give up attitude also helped me to successful.
That's great. What have you found to be your biggest challenge, let's say professionally, whether it's in your career or whether it's in real estate?
I think at this point, finding good deals is a big challenge right now.
Yeah.
So yeah.
It's always a tough spot.
Yeah.
So how can our listeners learn more about you and your business?
So there are multiple ways they can reach out to me. So I do organize virtual conferences. It's called multifamilyap360.com. That is one way they can, attend my virtual conference. And there are other way, like, if they want to learn more about my investing opportunities, or also if they want support on coaching side, they can reach out to me through info@ushacapital.com, USHAcapital.com. That's how they can reach out to me.
Yeah, that's great. I will put that link into the show notes there. And Rama, thank you so much for coming on today. A lot of great information and looking forward to connecting with you here in the near future.
Thank you very much, Charles. Thank you. And thank you for this opportunity.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.